And let's welcome on board Vinay Khattar, Senior VP, Head Research at Edelweiss Financial Services. Vinay, hi, morning, good to have you on the show. And it's the polarized nature of the market which we've all been zapped about. While the Nifty continues to hold out around 10,600, 10,700 thereabouts, led by 15, 20 odd stock names. What's going on with the broader markets? What explains this kind of vicious sell-off?
Hi, morning to you. For the mid caps and small caps, everybody saw it coming. There was a huge amount of froth which had got built up. Last year we had a massive bull run, which was very focused towards mid cap and small caps. A lot of these stocks had become multi-baggers. A number of them had prices running quite ahead of themselves. So one factor is that a price correction was anyway overdue. The trigger came in the form of LTCG, higher interest rates, and so on and so forth. And that price correction is well underway, and to our mind, most of the damage is done. Second is what is hogging the limelight today, which is the significantly deteriorating macro situation. Whether that is the twin deficits, we are expecting almost 50 bips higher on the current account deficit as compared to last year. Similarly, the fisc is going to be under a lot of pressure with what's happening on oil. There is enough talk that probably government will be forced to cut excise if the oil remains at an elevated level, or you see more upticks on the oil prices, and that could impact government revenues. Almost a $1 cut could lead to about 13,000 crore kind of an impact on the excise. A 1 rupee cut, could impact the excise by about 13,000 crores. So even if you have to take a 2 rupee cut on the excise side, that is sizable chunk. Plus you are hit on the subsidy side. So overall, the deficit scenario, both on the current and the fiscal, appears to be a bit challenging, and the oil has to stop for that pressure to ease off. But having said the negatives which are there, and most of that is in the price, our sense is that a large chunk of correction is already done. If you were to go deeper into the numbers, and we were just looking at Nifty 500 beyond Nifty 50. So Nifty 50, because of their size, scale, and limelight, they hog all the attention. But if I were to just minus Nifty 50 from the Nifty 500 and take the PSU banks out completely of this, the rest of the universe is doing very well. So the operating profit growth in Nifty 500 minus Nifty 50 and public sector banks, the profit growth is close to 41%, the operating profit growth. This is somehow not catching any limelight because of the sizes are very, very small, the numbers are smaller, and so on and so forth. So once the damage is done, I think the value will begin to emerge, and this steep correction will provide an opportunity for a lot of investors who have missed the early part of the rally to re-enter the markets.
Vinay, so one side of the story is that you believe that a large part of the damage is already behind us. Do you try and time a bottom to where the mid-caps correction is going to end, or do you already begin hunting on stocks and sectors which you wanted to buy in 2017 when they were all holding out but didn't get the opportunity to? Do you think it's time to begin hunting yet again?
So if I will just give you the trends which are there available on our desk as far as the HNIs are concerned, the hunting has not yet begun, quite clearly. People are still on the sidelines. A lot of them have reduced their positions. The leverage is coming down. As far as we have a research setup is concerned, we obviously keep hunting whenever the opportunity rises, and in this case, large price corrections have provided us with those opportunities. So we are looking at a lot of stocks which were under our coverage, or which have corrected significantly, or the ones in which we missed because of high prices. So that search is on, and our sense is that as we find the bottom of this particular steep correction, some of those names will come back vigorously.
Is pharmaceutical one of those pockets, Vinay, where you would be looking? Just yesterday you had DRL Srikakulam plant get the API nod by the US FDA. This morning you've got news of that big boost, a biosimilar clearance coming in from the US FDA for Biocon. Is that a pocket of interest to you, selectively albeit?
Yes, you rightly said it. Selectively, yes. So we've been quite negative on the sector with what was happening on in the US generic market space. More number of filers were coming in. The generic prices were crashing. I just heard the speaker before me on your channel talk about the structural changes which were happening in the generic market space in US. And we've spoken enough about the distribution consolidation in US, which is putting enough pressure on the margins for a lot of generic players. So structural story on pharma is still not on, but selectively we are beginning to like stocks, and Biocon was one of the names which you took, which we like because of this biosimilar opportunity, and the drugs which have got approval for which the news flashes we were in the morning are pretty interesting one. They prove the R&D capability of Biocon beyond reasonable doubt, and that becomes a very interesting bit both as a company as well as the space in the United States. A second one where we are changing our view from negative to neutral is Sun Pharma. Sun Pharma, if you look at the numbers, market is kind of over discounted. There has been so much of pressure on the price. If you were to just break down the whole business and look at various parts, our sense is market is giving very little value to US generic business, and the numbers have been improving for last 3 to 4 quarters from the bottom very consistently, and our sense is that this trend should continue. So Sun Pharma could again become a more interesting bet as the time progresses. So within the pharma space, these two ideas is what we would tend to recommend.
What's the view on infrastructure then? You know, I know this has been a favorite space for you guys at Edelweiss, but the fact of the matter is a lot has already moved there. Selectively though, but a lot of these infrastructure stocks are already, you know, sitting at year highs.
You're right, Tanvi. So let's look at the China example. When the infrastructure construction cycle started for Chinese companies, by the time the cycle came to the fag end, you had multi-billion-dollar market value companies. Our sense is that India is going to be no different. If you look at the top two players, the Larsen & Toubro and Dilip Bilkons of the world, they have the dominant position in the market today, and Dilip Bilkon's market cap is it's reasonable, but it's not very, very large, so to speak, in the global context. Look at the other players. The size of the projects is going up. Almost 1,10,000 crore, 1,20,000 crore worth of funding requirements would happen because of the HAM projects over next 18 to 24 months. This will open up so many more avenues, not only for the infrastructure players, but for the infrastructure financiers. New players in the financing side are going to be coming in because public sector banks are completely out. So you'll have private sector banks, you'll have mutual funds with the debt books and so on and so forth participating. Look at the size and the scale of the projects. State governments are becoming very, very active. Maharashtra, the Mumbai-Nagpur Expressway is worth 46,000 crores. Purvanchal Expressway is worth 20,000 crores. Now that kind of size and scale of the projects coming from state government is very, very interesting. When our sense is that this will just move up as more and more states participate with more mega projects. Plus the competition has come down. You have, for most of the HAM projects, just 5 to 6 players tendering, and the order books are almost 4 to 5 years worth. So this is a long-term structural story. The market corrections like these will provide us to opportunities for us to enter and for our investors to enter. But these are the stories which you should get off very, very quickly. Either it's a buy and hold strategy, or for the shorter term investors, enter in at appropriate times when the market corrections provide lower PE multiples, because the order book and the earnings growth is not coming down any soon.
That make the ancillaries like cement as well interesting, Vinay?
Cement has been a pretty punished sector, so to speak, in last few weeks. The prices have come down for the stocks very, very rapidly. But if I were to just go to the fundamentals, we are experiencing volume growth which is very, very good. This quarter the volume growth on the cement side is more than 18%. Capacity utilization for this quarter has inched up to about 75%. Now what is happening in the cement is that the cost pressures have gone up significantly, and a lot of that is happening because of the logistics. The overloading on the trucking, on the trucks have been banned across many states, which is putting a lot of price pressure. Plus you have the petcoke pricing issue and the environmental concerns. So the pricing has been pretty firm, which has caused your EBITDA per ton to be kind of under pressure, but the volume growth which is happening and then the prices holding up in large parts of the country to some extent, it tells us the future is going to be far rosier. If the volume growth continues close to mid-teens or high teens, it's only a matter of time before the capacity hits a point where the pricing begins to improve dramatically. Cement manufacturers have not made a lot of money in the last few years, and that should begin to change. If the infra story and the housing story in India has to play out, cement players are going to be the dominant beneficiaries in these stories. So overall, the trend on the volume side and on the pricing should become better as we go forward.
Okay, some investment opportunities highlighted by Vinay Khattar. Vinay, such a pleasure speaking with you. Thanks so much for taking the time out and joining in today. Okay, that's the view coming in from the House of Edelweiss Financial Services. On that note, we're going to take a very quick break. Status quo for the market hasn't really improved much from there. It's still pretty quiet. The struggle with 10,600 continues for the Nifty, and it continues to be a bleak day for the market breadth. When we come back, chat with the management of BEML.